Good day, everyone. Dr. K here with Guild Morales, and we've got the markets that have been, well, in the S&P 500 anyway, it's been pulling back, but in a seemingly constructive way. Lower volumes in the last few days. Meanwhile, riskier indexes like the Russell 2000, which is a small cap index, is right near new highs. The NASDAQ as well has been outpacing the S&P. And we've got a green light from Bernanke on full quantitative easing. The Syrian situation seems to be more at bay now. And we got Janet Yellen, who is the front runner for Bernanke. So the central banks around the world are printing in mass at full speed. And this is pushing the market higher, although in a reluctant fashion. Sort of as it did in the first quarter of this year, with baby steps higher on volume levels that are pretty anemic. But nevertheless, while this quantitative easing continues, the market does have that quite powerful tailwind. And we also see the leading stocks, Facebook, Tesla, and so on, continue to do well. Both are hitting new highs today as I speak. And so as long as these leaders, some which had fairly big pullbacks over the last several days with a weakness in the market, but those taken in context, those stocks had big runs, big moves higher. So a big pullback isn't all that cause for concern. So overall, the internals in the market look fairly healthy. And we are going to go from here and continue to let the stocks tell us what to do as concerns pocket pivots, viable gap ups, and any short selling strategies. Gil?
Yeah, it looks to me like the reason the S&P has been underperforming is because you've been seeing financials get hit recently, and they've come off. So they're sort of mirroring what the S&P has been doing. You can see the pullbacks are similar, and so I think that's one of the reasons why the S&P, well, probably the primary reason why the S&P has been underperforming right now has basically been the financials, whereas the NASDAQ is doing reasonably well thanks to the action in Facebook, which just continues to plow higher. This is starting to look like a sort of an exhaustion gap this past Tuesday, and it has actually turned on higher, so it's still pushing higher. Getting a little bit parabolic, so we'll see how this thing does. But that's what's been helping to drive the NASDAQ higher, along with names that are on the NASDAQ 100 now, like Tesla, breaking and going higher, just moving higher. You're sort of wedging in here, so you might pull back in here. I think it's kind of dependent on whether we see the NASDAQ start to correct as well. I don't think necessarily this looks pretty good, but the other thing is that you do have some divergence here, and the financials are dragging things down. So there's always the open question as to whether, at least in my mind, as to whether the NASDAQ could get dragged down. You did have 3 days of volume picking up, Monday, Tuesday, and Wednesday, and the index is churning here. You rise yesterday on slightly less volume, and you're pulling in today, so you're kind of hanging out, but there is some sort of very subtle distributive action into the indexes here right off the peak. So it leads me to wonder, okay, are we going to see the S&P going to come out of this and turn, or will we see the NASDAQ come off? And some of that might be news dependent. It might depend on what happens in October in terms of more tapering or no tapering or going taperless, as well as what goes on in Syria. There's really nothing happening there. There's a lot of talk about the Syrians allowing the UN or other countries to take control of their chemical weapons, and nothing concrete really has happened yet. So there's still a potential for that to provide bad news. And then, of course, you have the big news today is this budget dispute where the Republicans in the House are standing pat on this raising of the debt limit, and it's always been the case. This might be, you can correct me if I'm wrong on this, Dr. K, but I think anytime there's been a need to raise the debt ceiling, that's happened. I think there's only one time, it was in 94, 95, or 96 during that period when the Republicans first took power in Congress, in the House and the Senate back then when Clinton was president, and they actually did shut the government down a couple of times during that period. But if you recall, there were some constructive things that occurred from that because, well, Clinton and the Democrats like to take credit for supposedly balancing the budget, and I believe in 99 or 2000. And I would also remind you that that's on a cash basis. If the government used accrual accounting, they would have to show these huge deficits, all these unfunded liabilities going forward, such as Medicare, Social Security, etc. But on a cash basis, they were able to balance the budget, I believe it was in 99. But you have to consider that all of that probably came out of all the wrangling over the debt ceiling and the Republicans standing up to increase spending. And I think also Clinton getting on board with the capital gains tax cut in 97 helped. So, you know, it's not such a bad thing if the government shut down for a while. I'm sure a lot of you might agree that that would mean less government. As far as we're concerned, less government is better government. And sometimes when the government isn't doing anything, that's the best place for it to be, sort of a sleeping giant that isn't running around stomping on things and knocking over the furniture. What's that, Dr. K?
Yeah, amen to that.
Yeah. So, anyways, I kind of find myself, it's a little bit boring here. You know, there's not a lot going on. We had a lot of stocks making sharp moves up. If you go back, I'm going to go through some names that I'm just keeping an eye on. Some of the best moves occurred from late August. And so at that point, the market, if we look at the NASDAQ was hanging around the lows here. Things are looking pretty grim. And the market turned up. So, you know, keeping in mind that the market has had a decent run since the lows of late August. A lot of stocks also had the best parts of their moves during that period. If you look at, say, Splunk, for example, let's see, let me get this chart out here, make it a little bit bigger. Had the Bible gap up and it's had a nice move ever since then. If you look at Yelp, started its move back in late August, and that's had a nice move since then. Even stocks like Blocks, which is trying to turn today off the 20-day moving average. That's my magic moving average. You know, it started its move in early September, and so most of these stocks have run up. Let's see if I can look at Netflix here. Netflix really started moving back along here in early to mid-August. So a lot of these stocks are up there, and they've had pretty decent moves, so they might be entitled to some pulling back in here as the index is pulled back, and we have some uncertainty with respect to the debt ceiling, tapering, and who the new Fed chief is going to be. You really think it's going to be Yellen, Dr. K? Is that your bet?
And the market perceives this obviously as dovish for quantitative easing. So
right.
The market seems to be projecting that.
So you think she's a shoo-in then? Yeah, I guess I don't know who else.
I don't know if the shoo-in, but let's see what the market says. And so far, it really likes the fact that she's you know, on deck.
Yeah. Anyways, so you know, a lot of these stocks have moved up and they're kind of bouncing around. Just quickly going through some of the things I'm watching, what's acting well today. Notice these solars, these Chinese solars are going bonkers. CSIQ had a little pocket pivot here. You know, we've seen SunPower is moving along too. I think most of this is due to Germany talking about reconfiguring the subsidies for solar. I don't know if that means that they're going to increase them, but that's been good for the Chinese stocks. You see Yingli Green Energy here chopping and hopping around the 6 area and then popping through today. So a little chopping before it starts popping. And you also see Trina Solar is another one. Pops out and running up, and these are all kind of on fire. I'm trying to think of JKS is another one moving up. And so this has a tendency of dragging up SunPower, which is probably the soundest of the U.S. Solar companies, and mostly involved in bringing solar to the commercial side of the equation with these big arrays that they put on. I think Google uses them, and a few other large, I think Walmart also uses them, and they put them on top of their buildings, and it works out pretty well. So, you know, the other one in here is First Solar, but I think First Solar's got a problem because of their technology. I don't think it's all that modern. It's a little bit behind the times. So you do see a pocket pivot off the 200-day moving average, but it is a weak one because you're coming from a position well below the 50. Dr. K, what would your general thoughts on this be in terms of this being a viable pocket pivot 3 days ago?
Well, I don't like that it gapped down recently on the earnings report. It's just the stock. I don't like the pattern. It's got a lot of holes in it, so I wouldn't really be interested. And also,
Yeah,
it hasn't cleared the 50-day either.
no, it's run into some resistance. I kind of look at this one as possibly shortable, depending on what goes on with the market. This thing, if you look at it, you got one leg down off the peak, two legs down. So usually you'll get a third leg down, and I'm sort of looking for that here. Stock actually started up today, and it's stalling around, well, not that far from the 50-day. It's pretty much right at it, I think, right now. 41.01, and your 50-day moving average is 41.11. So it's sort of faltering here. But that looks like a possibility on the short side. We've also been looking at Urban on the short side, which broke out on the downside from this bear flag, and it's continued lower. Bottomed out today. My guess is you probably, let's see in here, yeah, you're getting into this base, so you're trying to find some support off the lows of this base. But that still looks pretty weak. Lulu was the one that kind of flopped out pretty quickly, and it's moving sideways. I'm not sure whether this becomes shortable again if it breaks the 50-day moving average, or possibly one to keep an eye on. It sure seemed like nobody was interested in selling the stock on this wedging rally, because you see the wedging rally, and there's above average volume here, so somebody likes this thing down here. I'm not sure who, but just keep an eye on it. Maybe it sets up again as a short. The pattern has those that classic look to it. And so this is a weekly chart, so you can see the left shoulders and the big head. The big break is the right side of the head, and you have this right shoulder. Maybe it forms another shoulder or two, and maybe it comes into play again. So I would keep an eye on that one. It's a good possibility that it could fail again, but we'll see. Right now it's trying to hold above the 50-day moving average. On the long side, again, let's look at some more names. ACAD going bonkers. Somebody asked if this was an ascending base, and if you look at this, I think it's a reasonable question, because you have one pullback, you move to new high here, you pull back into the structure again, move to new high here, and you pull back again, and then you rise up and you come out of here. So you could say 1, 2, 3 pullbacks in this ascending pattern, and basically, it's mildly ascending. This one kind of reminds me of Home Depot, I think from like '86 or something like that. It's a very shallow, but it's an ascending pattern, and ACAD has actually had a very nice move since the pocket pivot that we picked up on right about here, and stock's jacked from there about 25, 30% higher actually. So it's had a pretty good move there on that pocket pivot. But you could look at that, sort of an ascending pattern, and that would be, let's see, 1, 2, 3, 4, 5, 6. Yeah, you call it about a 13-week pattern. So, if you want to label things, it could be, you could look at it as an ascending base. So far, it has had the power of an ascending base type of breakout. But you have this pocket pivot is what started it all. So regardless of what you want to try and label it, the bottom line is that it has broken out on a pocket pivot and gone higher. So that's really all you need to determine what's going on with the stock. Let's see. What was that?
Just another computer sound effect. I got tons of them.
Ah, well, it sounded like a bird.
And that's another sound effect.
Let's see. Is there any chance, Dr. K, that QE does not end badly, or will they be able to achieve the proverbial soft landing?
Well, that remains to be seen. History shows us, though, with this kind of money printing going on, there's got to be the changing of the guard, so to speak, between the fiat currencies, well, the dollar's the fiat currency, and fiat currencies have a limited lifetime. If you go back hundreds of years, you see various fiat currencies that tend to last from anywhere, between 60 to 120 years, and then a new currency takes over. And with this much debt saddled in the U.S., the UK, and Europe, and with as much credit as saddled with countries like China, I think there's going to be a changing of the guard over the next 10 years. And the question is how gently that's going to occur. Is it going to be with the U.S. starting to fade economically, and China taking the lead, or is it going to be more volatile as the baton is passed from one country to the next? And again, this Greens, all the central bankers would love to see that that the economy, global economy, rescues the world by really finding its footing and establishing normal growth patterns once again, which would allow central banks to ease off the quantitative easing spigot and start tapering and then fading it out altogether. Um, and that would be lovely if we did get that kind of soft landing. But history has shown that the soft landing is, I don't think I can't think of a time when we had a soft landing. So
Right.
I think there's going to be some issues ahead. There's bubbles that have been forming as a result of QE, and those bubbles have to be dealt with.
Yeah, my bet is I'm going to stick my neck in out here rather and say that there's no way they're going to achieve a soft landing, and whatever there's going to be some effects to be felt. But that said, the Fed could do what Japan has done, and you end up with the lost decade or two, and you just keep the system sort of half alive, on life support systems. And that's basically what goes on for an extended period of time, and we have a pretty muted and weak economy in the process. So, that's the other side of it. If they really didn't want to take the hard medicine and really pull the plug on it, I think that's the alternative, is just sort of muddling along for an extended period of time, which I don't think is going to be very good for the economy and for job creation and for the next generation. Anyways, Dr. K, another question. Any thoughts on how the market will react to the Senate vote today, as well as the ordeal with the government shutdown and debt ceiling issue? I think we kind of already covered that, but you could go into it some more. I mean, you can see the market's coming off today. Volume was up earlier on both indexes or both exchanges. The NYC are up to about 10% right now, down 3.48 on the NASDAQ. So NASDAQ's acting stronger, but it's got less volume. So still a little bit tenuous. But you have any thoughts on that? If let's say,
Well, it's always been the same situation before when we come to the 11th hour of the debt ceiling issue, because this is obviously not the first time. And the market gets nervous, and there's some selling going on because ultimately going to sell here, and then it all ultimately gets resolved, and so the market then reestablishes QE does its thing.
what's that, Dr. K? You warbled out on us again.
The market gains its footing, and QE then does its thing as it has in the past. So with the 11th hour upon us, there's nervousness, and then it gets resolved, and then the market starts to push higher again.
Right, and I think that's really kind of the gist of it. Yeah, there's going to be all this, chopping around because of the news, and the market gets news-oriented, and you get pullbacks and little corrections and whatnot. But ultimately, the overall pattern has been to see QE kick in again, and that becomes the overriding ruler of the trend. So, so what happens in the short term is just what happens, and I think you just have to watch the broader action in terms of a definable correction showing up or a bear market. So let's move along. I'm going to get some questions here. Gold had this big pocket pivot, retraced it entirely. It doesn't seem to be coming off anymore, so it's trying to hang in there, but it's underneath the 50-day moving average on the GLD. The SLB is also underneath its 50-day moving, so they're just kind of hanging in there, but not really going anywhere. So it's a little bit difficult to determine, I think, whether you've got some sort of a bottom. I read some article the other day, some guys showing technical reasons why gold and silver have found a bottom, and they're starting a new uptrend here, and it's going to be glorious times for silver and gold. Again, maybe that's true, and based on what you've been saying, Dr. K, about Janet Yellen coming in and taking over as Fed chief, and so the QE is going to be alive and well. Maybe that is what happens. But right now, it would seem that gold and silver are telling you that there is going to be some tapering in October. If you look at the bonds, the long bonds here, they're trying to rally, so that tells you that there's going to be no tapering. The dollar, it has been making new lows, so that seems to also tell you that there's going to be no tapering. So, net, it looks like the market is voting for no tapering. What you've got going on right now, I think, is a pullback in the indexes that is based on the fact that you came up quite a bit already off the lows of late August, and you are now sort of consolidating. A lot of stocks have had big moves, and some of them are chopping around and consolidating. That's kind of what you're seeing. It shows up in the indexes. Meanwhile, I think the financials have come under pressure, and that has knocked the S&P down. So whether that becomes a meaningful divergence or not remains to be seen. But, so, I would say the metals seem to be arguing that there is going to be some tapering. The dollar and bonds seem to argue that there won't be any tapering. So kind of a mixed message there. So I would expect if the dollar and bonds are correct, then gold and silver should catch up. Anyways, some more questions. MELI, a tricky stock, pretty volatile, but you had this sort of pocket pivot down here. Tested the 10-day. Actually, notice the 20-day is what it tested here, and now you're breaking out. So you got a base breakout here. Mylan had a viable gap up, and it's just holding tight sideways. Dr. K, do you bring the so-called 6-day rule into effect here?
Let's see. Yeah, definitely, without question.
So basically what that means then is that from here, if it breaks the low of this day, you're just gone. You're not giving any porosity to it.
That's right.
It does not mean that you run for the hills right here and now.
No, I mean it's been a bit stodgy, So if you want to make room for a better stock, by all means cut this position in half or full. But if you don't need to make that room, you might as well sit.
Yeah, and just remember, it's Mylan Labs, so it's not. It's a big old drug stock. It's not some young dynamic company, so it's not going to move with a huge amount of upside velocity. You kind of have to keep that in mind. Let's see, S-Fun. Sufan, a thin Chinese stock, this thing runs up and pulls back. It's pretty volatile. It's just trying to hang out at the 10-day line, not much else. I mean, it's up there, so it's entitled to have a little bit of back and forth type of action from here, but not too much going on here. Maybe you get a pocket pivot off of the 10-day moving average. You could watch for that. DDD bucking the rest of the 3D printers. That's true. I mean, SSYS Stratasys is trying to rally back up. It still looks kind of cheesy to me, but it's been trying to come back. Triple D, though, it's still choppy and sloppy, and I'm not sure. There's a lot of short interest in this thing. I wonder if that's what keeps it up. But you wonder what the shorts think they know. The stock, just been very begrudging in terms of getting going from this deep cup with a handle, and it did break out, and it's so far holding this kind of choppy breakout, and so it's hanging in there. And you did have this pocket pivot 4 days ago on Tuesday, so it's still hanging in there. But the rest of the group, X1 getting chopped up, and I think Protolabs, which you can, or you might exclude it from the group. It's a little bit different. Just pulling back to the 10-day and not really going. So really the weak ones are X1 and Stratasys, whereas 3D is holding in, Protolabs is holding in. There probably will be more entrants coming into this business, I'm sure, over time. So let's see what else shows up. Yandex, not doing much anything since this pocket pivot, and I believe this pocket pivot here, and just holding sideways along the 10-day. Nothing going on. So looks fine. So somebody says maybe it needs to break through, I'm talking about Yandex, through IPO high for a real move to start. I don't know. It's gone from 26 to 36. That seems like a real move to me. So, here's one for you, Dr. K. I already answered this in the chat room, and I'll have something to say about it once you answer it. But has there been any backtesting on viable gap ups and pocket pivots in aggregate to expectancy rate?
What does he mean by expectancy rate?
I'm assuming what they mean is the risk expectancy. In other words, in aggregate, how do all pocket pivots do, and how do all viable gap ups do? My initial answer is that's a totally irrelevant question to ask. It's meaningless. Your thoughts, Dr. K?
Yeah, it's just sort of like base breakouts. Same thing. You've got a lot of base breakouts that are going to fail. That doesn't mean the strategy is invalid. I mean, in the 1990s, even during the best markets, you still had a 50% failure rate. And in a year like 1997, your failure rate was upwards of 80%. But that didn't mean that you couldn't make, I just eked out a triple-digit return in 1997, and my success rate was 21%. So it's all about how you handle your winning positions.
Right, and the other question I would ask is, let's say if you knew that 20% or let's say 50% of all pocket pivots fail, what does that mean for any given pocket pivot? How is that meaningful in terms of how you would handle a pocket pivot? I'm only going to buy 50% of what I normally would. It seems kind of silly. You would take your normal position on the pocket pivot and then work it from there. The bottom line, I think, is that even if you're right, say 1 out of 3 times, so you're wrong 2 out of 3, and you get hit on the 2 times that you're wrong, you get stopped out. A successful one should outweigh the gain or the losses. The gains in the successful one should outweigh the losses of the unsuccessful ones, and that's really what you're playing for. But I think all of this. This allows me to just segue back into the thing that everybody wants to quantify everything, and they think that somehow they gain meaningfulness by quantifying everything because what they're doing, and this is something we wrote about in our recent book. In the Cockpit with the O'Neill Disciples, which is the search for certainty. People want to find certainty in the markets, and the thing is, you have to become comfortable with uncertainty rather than constantly looking for this holy grail of certainty, whether it's the percentage of pocket pivots, some number that you can hang your hat on and grasp onto and sleep with at night like some sort of teddy bear or security blanket. It's all BS, and it's the same thing. And the other question is, what is the minimum amount of trading volume you want to see in a stock? Well, who gives a flying whatever? Why is that relevant? If you have a tiny account, yeah, you can play 100, 200, 300, 400 share positions pretty easily. You can buy any stock, and it doesn't matter what the average daily volume is. And in some cases, it might allow you to ride some of these little heaters that trade 150,000 shares a day and go nuts. But the other concept here is if you have a big account, you need more liquidity because you need to be able to move in and out of your positions reasonably well without encountering too much slippage. But let's get back, and this is something I talked about last week, is the idea of forget about volume limits in terms of some magic number that they have to trade every day to be playable. What is a big stock? Think of it in terms of big stocks. Big stocks trade 2, 3, 4, 5, 6, 7 million shares a day. And so in that sense, if you're looking only for big stocks, for the Facebooks, the Teslas, the Netflixes, the LinkedIns, the Yelps, those stocks trade in the millions. So you don't ever have to even ask that question because you're already focused in the right area of the market, which is the big stocks. And the same thing goes with pocket pivots and buyable gap-ups. If you just take buyable gap-ups and pocket pivots in aggregate, and that's a meaningless statistic. What I want to know is, did you use a pocket pivot or a viable gap-up as a tool to buy into a stock like Tesla, to buy into a stock like Facebook? And that's really where it becomes relevant, not in and of itself as some sort of signal that thereby generates an aggregate performance. You've got, as Bill O'Neill used to say, you've got your head where the sun isn't shining, and you need to pull it out. And that's what Bill would say to us when you really were off track. And I think those types of questions are really off track, and it goes to anything where somebody's asking about quantifying certain things, quantifying risk, because it all speaks to this idea of not learning to be comfortable with certainty and looking for this holy grail of certainty that does not exist. And really, I think we need to condition ourselves and learn techniques that allow you to deal with uncertainty. So, anyways, that's my 50 cents.
And that's, of course, why it speaks to volumes for keeping, respecting one's sell stops and always knowing your exit point. It's paramount so that you can withstand a lot of small losses.
Yeah.
Especially if you're in one of those nickel and dime kind of environments, which, if you get nickel and dime enough, eventually you get quartered. So it's important to adhere to your sell stops.
Yeah, and again, go reread that chapter. I forget what chapter was that, Dr. K, where we talked about, the need for certainty in the markets and how that's really a misdirected need. Let's see. Let's go to some more. Somebody's asking a question. Is there? This goes right back to what we're just talking about. Is there a rule of thumb on how high a stock with an ascending base can go? Yes, it can go up 72.89674238.27%. You get 2 decimal points in that just for exactitude. No, there isn't. It goes up until it doesn't go up anymore, and you use your selling guides to bail out. So there is no rule of thumb. But you might say, that in this market, if you get a breakout from any kind of a base, you run up 25, 30%, even 20%, maybe you should take some profits at least. So something to think about in those terms, given the market environment, and something I've advocated throughout most of this year. So, Seesaw. What is Cornerstone, One Demand? What is this? I'm going to have to look this one up here, sports fans. Looks like a computer software company losing money. And the base, if you're just looking at purely technicals, it's got a nice pattern. It's a little flag formation, some support on volume here. Drying up on the pullback, just solely on technicals, maybe it looks like it wants to move higher. I'm just watching my short position in First Solar getting clocked and moving lower here. 40.78. I think that's a new low for the day because I think it did gap up. No, actually that's not true. It's a lower low. But anyways, just keep an eye on that. Disca. I love this. These stocks that look okay. There's a couple of these under Discovery. There's the A and the B. There's Disc B too, I think. Let's see if I'm right. Maybe Disc. Well, whatever it is. How about Disc? Nope. Disc. There's another one of these, right, Dr. K? That trades more liquid. But you can see here you had this. What was it? Up. Here's a pocket pivot yesterday, and so trying to come up and around. The base is okay, I guess. Looks okay, but I think some of these. I think Discovery isn't it Discovery Channel? Yeah.
Discovery Comp. Yeah, that's right.
Yeah, so it's content company. So I know Sinclair Broadcasting just continuing to chop its way. Look at that. Okay, this was looking. Was it this day? I think it was this day. No, this day. And my bar is color-coded red because it opened up higher than it closed. So I just have my bars color-coded that way just for fun. It is useful information, but in this case not really because that is a pocket pivot. But Dr. K and I were looking at this on this day, and you notice the volume is declining. The upside volume declines, so it's really kind of wedging. So it's a pocket pivot coming after a wedging rally. And so we were a little bit concerned this wouldn't work, but of course it has, and the stock's going higher. I guess they bought 8 new stations, and that's going to create wonderful new synergies apparently for them. The stocks continue to move higher. Stalled a little bit, but moving along. But it looks like you're seeing a number of these. And there's TWC, Time Warner. This is a cable company, though, but it looks like it's also trying. There's a couple others like this. What effect, here, Dr. Here's a question for you. What effect of eventual rising interest rates on financials? I guess the question would be, what effect will rising interest rates have on financials? In other words, if they have no more ability for them to borrow at a 0% interest rate, is this the end of the line for financials?
Yeah, I mean, obviously the bond market is in a precarious position because with rising yields, bonds will fall, and the bonds have been at unprecedented lows in terms of yields. Yields have been at unprecedented lows, and it's just kind of the flip side of the early 80s where you had unprecedented high levels of yield, where your savings accounts could easily earn 8%. Of course, some of the housing yields were off the charts back then, and we knew that bond interest rates would have to come down, and so it was a no-brainer for people involved in bonds in the early 80s to take big positions and make big gains off bonds. So we're at the flip side right now, and as far as financials, banks and things like that, I think they're going to have a tough time of things as rates start to climb. Again, we could have one of these lost decade situations on our hands because we don't want the bubbles to burst, and so we let the air out gently, but that causes a lot of strife and strain for various industry groups.
Yeah, and I think you're seeing it in the banks. Citigroup breaking down, Wells Fargo, breaking down. I mean, this is what's been bringing the XLF down, obviously, but yeah, it seems to be saying that that's the case. Um, Zoom, whom, as we like to call it, pocket pivot, but hey, you know what? In this market, anything that looks like obvious strength like that, I'm not going to buy it. So they just don't seem to work, so it fails. So Dr. K, let's say on this pocket pivot you bought the stock. What would you do now?
Let me just check it out on my screen here. Yeah, I would wait till it's going sideways right now, and I would probably be selling it if it undercut the lows of the sideways move. So, maybe selling it at 30.7.
Okay, so if it dropped, you're at 31.74 right now. So if you drop below, basically what you see here is it's holding the 20-day exponential, my magic green line that I like to use, money line as I like to call it. That's why it's green. But you're along the lows of this sort of pattern. SRPT, Sarepta Pharmaceuticals, right? Yeah. Well, again, a lot of strength in the pharmaceuticals, and you come straight up off the low, so you're going sideways. You might need to consolidate in here. So much in the market's getting a little bit weaker. First Solar's getting a little bit weaker. Here's my theory. I'm watching some of these stocks like Facebook going nuts on the upside. Netflix got hit the other day on the outside reversal. That was Monday. LinkedIn is floundering a little bit here, I think. I think you're going to see a test here. Tesla's acting okay in Facebook, but I think when you see these stocks get clocked, that might be the end of the correction. So usually what happens, the best acting stocks will hold up, and then the market will correct, and then boom, they'll hit the best acting stocks, and when that happens, that's the low. And so I might keep an eye on that. The flip side of that is if you don't see an instant recovery or a quick recovery after that, it could mean that you're topping. So it's a little bit qualitative there in terms of what happens after you see that. But something to watch for. Anyways, this stock, Sarepta, needs to go sideways. Just kind of got off on a tangent there. We already talked about S-Fund, Q-Core. You don't want to touch this at the 10-foot pole. This was done last couple weeks ago. I think we talked about this once it broke down like that. Couldn't hold the breakout here. And again, here we have a breakout. But notice it is only a pocket pivot breakout. It's not a heavy volume breakout, and then it fails rather quickly. And then something like this, if I buy into this, if it doesn't hold that breakout, I'm gone. I just sell it. Yeah, sometimes you might get shaken out, but most of the time you save yourself from having to live through something like this. But notice how it rallies into the 65-day exponential. That's the black line I have here, the other magic moving average. But it's broken down and it has violated the 50 days, so it's pretty well toast. Would you come after it on the short side? I think it's fairly news-oriented, so you would want to be a little bit careful there. So, sorry everybody, that was my silly cell phone making noises. People always like to call me at the most inopportune times. Let's see. More questions. Comments on NUS. Comments are, you had a pocket pivot yesterday and it's holding, so nothing else really there. There's your pocket pivot and pullback holding. Next one, Kihu. I was actually looking at buying Kihu today. If there was some sort of positive action along the 10-day, it's starting to pick up volume and break down. So it's had a big move. It might be in position to test the 50-day. Let's say the market gets in more trouble. That might be exactly what happens, so you kind of want to watch for that. If you own the stock, Dr. K, you would use a violation of the 10-day moving average here as a sell signal, correct?
Yeah, because it has obeyed it for more than 7 weeks, but it did violate the 10-day on the 17th of September.
Mm-hmm.
So I would have been selling on that day. And it looks to me now that it's trying to set up a new basing pattern. So it's a great looking stock. So it potentially will give another entry point in the form of a pocket pivot.
Yeah. So you could sell it, take your profit, and then hang out and wait for a new buy point. Is there a good way to play UVXY into the Monday deadline? What you mean? No, I don't. Yeah, that's like asking, is there a good way to play red 19 on the roulette wheel? So I don't know. If you think the market's going to crash on Monday, then you would buy it, I guess. And if you think the market's going to rally, then you would short it and go along the inverse. So I don't know if there's any good way to play it. You're basically betting on a binary outcome and assuming that the market's going to act a certain way based on a particular outcome. Sometimes the market doesn't do what you thought it was going to do when certain news comes out. So, there's always that thing to think about. Please repeat the 6-day rule on a viable gap up. Can I do this, Dr. K? Can I? And you tell me if I'm wrong. Basically, if you have a viable gap up, well, let's not use that one. Let's go back to Myland. If you have a viable gap up and the stock hasn't made any further progress within 6 days, then all you're doing is you're not giving it any porosity when it breaks below the intraday low of the gap up day. So whereas you might otherwise give it 2 to 3% porosity, if it's been longer than 6 days, 6 days or longer rather, and it does that, you just blow it out. So sometimes you might just blow it out anyways. But did I get that right, Dr. K?
It's good to me. Sounds good.
Okay. Regarding the action on blocks today, can it be considered a pocket pivot? Well, it can only be considered a pocket pivot if it exceeds, I believe it's this day, 3 days ago, that volume, so it's going to have to exceed 1,000,003.
Yeah, it probably will.
Yeah, if it holds above the 10-day, or you could even use the double secret 20-day exponential moving average pocket pivot. Notice here's another one holding the 20-day exponential moving average. Isn't that amazing? See? There it is, the 20-day magic moving average. You can use it all the time. If a stock pulls into it, you can just load up the boat, mortgage your home, sell your kids, the dog, and any other furniture and other useless material items to put all your money into a stock with a 20-day moving average, because that's certainty, right? So you seem to see it a lot these days, but I just notice it works in this environment. I like this part of the question, though, about blocks. Could the selling volume be weaker holders or profit takers leaving to give blocks less resistance? I don't know. You're going to have to take a poll, which I guess means calling up everybody who is a seller of blocks the last few days and finding out, if they're weak hands or not. You don't really need to think about it in those terms. All you know is you had a Bible gap up, ran up, it's held the intraday low of the gap up, so it's still in play. Pulls back. I like to use the 20-day exponential moving average as a point of reference, so you could have bought it, along the line here. So just go on that basis. Don't worry about who the sellers might be or not, because okay, what if the sellers are all strong hands? What does that mean? And how do you determine if somebody's selling? Aren't they by definition a weak hand? So again, don't worry about it. Just go with the action. Right now, it looks like it's trying to form a pocket pivot. Market's getting a little weaker here. Maybe we're gonna close it down going into the close here, so we'll see what happens. The pocket pivot question requires more parameters, say an ape. Okay, I guess somebody... Yeah, I just don't think in general you can take a look at all pocket pivots and come up with some statistic regarding their success rate that's even meaningful, because your success rate doesn't matter. You don't need to be right all the time. We talk about that one in our book as well, the last book, about how Bernard Baruch said you only needed to be right, what, 1 out of 4 times or 5 times, Dr. K, what was it?
Yeah, exactly. It's just, it's not to, I think it was, I'm blanking out here. In the 1920s, there's a very famous investor who basically went out and said that the percentage success rate is the least important statistic in investment success.
Right. It's what you do, and as Bill O'Neill likes to say, it's how you capitalize on something when you're right, and that's the key.
Bertrand Russell.
I love this question. Please clarify your spidey sense approach that you mention on chat frequently. I just watch the tape, and sometimes I can see things, and I can't tell you how. Obviously, if I did, I could package it in a bottle called, Spidey Sense tape reading, and I'd probably make a fortune. I could probably retire on that alone. I wouldn't even have to waste my time trading anymore, and I could get a real life. But I don't, it just comes with years of watching the tape. O'Neill used to have that. He could see things in stocks, and I would say maybe some other components. And those of you on the chat room know this, and we've even talked about it on the webinars. I like to look at the sponsorship in stocks and who owns them, how big they are, and how big of a percentage they are of their portfolio overall. When they started buying it, how much they've tended to buy during a quarter. I just look at a lot of different things, and then you try to wonder, well, who's the axe in this thing today or right now, and what could they be doing? And so that you combine a lot of things like that to come up with a sense of stuff, and I think O'Neill was very good at that. And to some extent, I can sniff things out, but it's not 100% correct all the time. A lot of times what I sniff out doesn't really occur. So, but I would say it's a willingness to use your intuition gained through experience. So in other words, an ability to synthesize a lot of information inputs that are occurring in real time and having the ability to sort of assess those and synthesize them to come up with a conclusion that's meaningful and can result in an investment decision that's successful. So Tango Tango, Wango Tango. Here's a big pocket pivot type move. Did we report on this one, Dr. K? I've never really liked this second. It's kind of thin. Trades 530,000.
We had some misgivings about this. I have to check the archives if we actually mentioned this. I mean, the fundamentals look pretty good, and the group strength has been very good. Yeah, I'll just check real quick. Tango. We reported on that. It's been a long time. Back in 2012.
Yeah, so I mean, you did have this big breakout type pocket pivot move here. Let's take a look at this, where it was actually trying to come out of this big ugly base. Let me shrink this so we can actually get a look at it. This is a weekly chart, so you're coming out the top of this right now. It's holding the 10-day moving average. I guess you'd use a violation of the 10-day line as your selling guide. Okay, where are we? Somebody here. This is well. I'm going to answer this real quick. In that sense, I hate the stock. I will continue to hate the stock because it edges up, has pocket pivots, and nice buy signals on the way, and then it just breaks and it flounders about. So you got to break down to the 65-day exponential through the 50-day. But notice how it found support roughly at the 65-day exponential, but did not violate the 50-day, which is the blue line just above. And now you have this wedging rally back up. So, I don't know. It looks like a short to me. I don't know. If you want to do a short-term short on this on the basis of this cheesy little wedging rally here. Let's see. Do I have any buying power? I can short a few thousand shares here. Okay, here I think this is a good point somebody makes, and this person is. I think perceptive. Livermore said, if you can't make money in the leading issues of the day, then you are not going to make money in the market. I have been limiting my stocks to those within the top 20 industry groups, and it has helped me to stay focused on the stocks that matter. And I say bravo. I think that's that hits the nail right on the head. And so when you're worried about, how many shares should a stock trade on average, what's the magic minimum, forget it. It doesn't matter. Stick to the big stocks. Stick to the leading issues of the day. Anyways, Alexion, you had a pocket pivot down here. It's been having pocket pivots all the way up. You might notice, bing, bing, all the way up. And it's trying to break out of this little cuppy handle thingy that it's forming. 1, 2, 3, 4, 5, 6, 7, 8 week cup and handle here. That's what I would call it. And it's trying to come out today. So we've had a number of biotechs acting really well. Aside from the Acadia, it's just going nuts. Celgene's breaking out. Gilead is trying to get back above the 10-day moving average. These things might need more time. And let's say if the market continues to correct, then I think it would make sense for them to go sideways. They have nice moves, but again, what we see in a lot of stocks is that the pocket pivots. The bottom fishing pocket pivots, these roundabout things that I talk about, they occurred in late August, some in early September, but that's where you've had the better moves, and now we've run up and everything's now going sideways. And so it seems to me that they need to put in more time sideways. And that may be the case here, and it all sort of fits together with what we're seeing in the market overall, at least our view. Alexion, SFM, we did that. SFM, this stock, you pulled back to the top of this breakout. It looks like a flag breakout here on the weekly chart. I can make it look less bizarre here, so that looks a little better. But some tight closes along the 36, 37 level in here, and then you come out, you break out, you pull all the way back this morning, and you hold. So I guess that is going to be that is going to be a pocket pivot off the 10-day moving average. Am I right there, Dr. K?
Yeah, that looks right.
AVG Technologies had a breakout and it's just kind of hanging along the 10-day moving average. Looks okay to me. Whoa. There's the weekly chart, broke out here, and you're just hanging along the 10-day. Looks okay. Nothing really wrong there. Somebody says Candy Crush filed for an IPO. If that's not a top, then I don't know what is. What is Candy Crush? I must be out of it. So,
Candy Crush. Yeah, I haven't heard of that one.
Neither have I. I guess we don't eat enough candy, Dr. K. Maybe that's the problem.
Video game.
Yeah. Dr. K.
Video game realm. So it could be interesting. Because those viral video games, they're pretty hectic. Like, what was it? The latest driving game that came out. That's been all the rage. Fifth Incarnation.
Yeah, the only thing I would say is that my son Alex told me to buy GameStop like a long time ago when it was like down here, I don't know, in the 20s. And I think he's probably one of their best customers, so he would probably know. But of course, I didn't listen to him. But is that what Candy Crush is? Just another video?
Yeah, Grand Theft Auto 5 just came out, and that's been all the rage because it's the best version in the series. And you have these things like Final Fantasy. They come through, and then sometimes they turn into like these very, very lucrative pieces of software because you got so many millions of people playing them.
Right, and I know my son and his friends have to have the latest version of everything. Dr. K, can the abnormal volume from quadruple witching be ignored when looking for pocket pivots, such as with ACT? I guess this was the abnormal volume. Was it last week? Yeah. Yes?
You got obviously exaggerated volumes, so you can take them into context and say that on a day like that, you don't have to use that day. You could say, yesterday was adequate volume to qualify for a pocket pivot. Right,
but this day was abnormal. Was this abnormal volume on the triple witching was last Friday, right? So that's this day.
Yeah.
My answer would be maybe yes and maybe no, because I remember Trulia got going, I believe, on this day, and this was what day? No, maybe that's not the one I'm looking at, but I remember looking at one that had a pocket pivot. Actually, yes, it was. It was this one, right down here. It had this pocket pivot right here. It's a bottom fishing sort of roundabout pocket pivot, and it occurred here, and that was options expiration. It was expanded volume, and that actually set off a run. So, I would say if they work, yes, and if they don't, no. So, but I don't think you can assume that you should ignore it or not. If the stock looks like it's in a decent position, maybe you can take a shot. In this case, that worked pretty well. AFOP. Is AFOP a flop? I don't know. I think it's pulling back in here. Volatile little stock, great numbers. Bible gap up. You give it a little porosity. It seems to be hanging in there. That's what I'm looking at. And this could be looked at as an ascending type of a base. So it may just need to settle in here. I kind of like it in here, pulling down into 21. So I think it looks okay on the pullback, given how volatile it is.
And then it's a micro cap. Keep in mind, it's not even a small cap.
Small stock.
It's got a lot of momentum in its direction. The fundamentals look good, and the group rank is number one. So, you have to weigh all those things and then position size accordingly if you're going to trade this micro cap at all.
Exactly. So that's but to be honest, we own a little bit of it, not a huge position, but looking at possibly adding to it down in here on this little pullback. The volume's drying up, and that's what I like to see. So my guess is you might, if you see light volume going into the close today, then you might look at picking up some shares here with pretty low risk, I think, because I don't think there's a big chance of it gapping down and say, here's a 20-day exponential at 2046. I've been thinking it might pull all the way back to there. Then I was thinking of, backing up the truck, beep, 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 coming in after it there, but it may not do that. It may just hold the lows. But watch the volume drawing up today. If you get there into the close, you might be able to edge into a position here. Somebody mentions the book Blink by Malcolm Gladwell. That's Blink, B-L-I-N-K, just like blinking your eyes. by Malcolm Gladwell. That's Gladwell, the two words glad and well, so that's pretty easy. It addresses the mind's intuitive spidey sense notion. Thanks for that. I think that's have to take a look at that book. So anybody who wants to find out more about the spidey sense and how that works, you can read that book. Is there a chart of another company that reminds you of Facebook? Not offhand. I mean, Bible gap ups. You know, let's go back to I know, Crocs. Here, let's go all the way back to. This might take a little while. 2010, going back 2009, 2008, and here we are. Let's see. Yeah, you had this Bible gap up, and the stock never looked back. It just headed higher, and it just trucked on higher. Boom, 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 and then finally did correct. So you look at Facebook now, and you have Bible gap up, and it just kind of trucks on higher. So I guess you could say in that sense, it kind of, but it's kind of meaningless. So it doesn't mean that it's going to correct anytime soon or whatnot. Ambarella, we put out a report on this pocket pivot. To me, this stock is erratic, and earnings came out last quarter up 13%. A thin stock. I just don't play, but it's been moving higher. So Silica, I think Silica looks fine. I like the fact you had a bottom fishing pocket pivot. If you look at the base here on the weekly chart, let's make it a little bigger. You can see it's a long base, and you can see you got a supporting week here. You got a supporting week here. You've got, notice as it comes down, you're closing off the lows, and boom, 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 and even here, this week you were down here, and you started the week here, and you closed the week up, so it color codes blue, even though it was down for the week, and you have supporting there, and then in here, here's the earnings report, and it broke down that week on heavier volume, but notice you have heavy volume without further price progress downward, so you hold a 10-week line. And you notice the volume dries up on this week here as it holds tight, and you're picking up some volume here as you're coming up the right side. You had a pocket pivot here. You also had a couple of others right here and right here on the daily chart along the 10-day, but it's a little bit up there. It tries to take off here. It doesn't quite get going and reverses. That's a market, more of a market function, I think. And now the stock is dribbling around in here. I think if you're looking to buy this, you want to buy it coming in towards the 24 level and on top of this, because if you look at this, this is the top of the lower part of this base. So you basically, I think, have support along here. Notice how it pulled back this week to the 10-week line and held. So I think this thing is setting up to come out. So I'm willing, if you have a longer-term view, I'm willing to come in and take small positions in here and see how it pans out. And if it starts to show some strength, maybe get bigger in it. NQ had the Bible gap up, and it's just kind of drifting higher. So nothing really special there. GMCR. I think the person asked this question, just so leadership losing its momentum, and I would say, yeah, it's you know, it's Green Mountain, and if we look at it here, you know, it's had a long lifespan, and if you look at this, this is the giant pod formation that AOL and Schwab made famous, I believe. I think AOL actually made it more famous, but you get this giant sort of big cup formation, and it's getting up to the highs again, and so it's late stage. It's had on the way up. If we kind of blow this up again, you know, you've had a nice move, so it's probably later stage. I guess a couple bases in here, and now it's failed. And so what you're looking at, any rallies back up into the 50-day moving average would be shortable from here. So to me, this thing is done. So, anyways, it's 11:31. We've gone. For an hour, so that's our usual time allotment. MELI, does it have enough volume for a pocket pivot? It looks like it. Let's see, right here you got...
It will clear it. It's just about.
Yeah, you need another 12,000 shares, so that looks pretty doable to me. So yeah, I think so. Let's see. I think we got all the questions, and that's pretty much where we're at. You know, I think overall, you're in a market that's moving sideways and correcting. Nasdaq's leading, of course, with some of these names like the so-called Four Horsemen, Facebook. Netflix, Lincoln's hanging in there near its highs, but you know, could need these things look like they might need to go sideways, and that might be what causes further correction. And meanwhile, with uncertainty over the budget ceiling, with who the next Fed chief is going to be, with tapering or no tapering, with what's going on in Syria, which might come back into focus, and it's probably a you know, a good place for the market to take a break. Remember, we started back in late August coming off the 50-day moving average on the NASDAQ, and we've run up. So you're entitled to some pullback. My approach here is stocks that I've had that have had big run-ups, like Yelp, you know, maybe even Tesla. I might back them down and bag some profits. I know Tesla's just barely out here, but you know how breakouts have worked, and I wouldn't be surprised to see it retest the 10-day. It has had a pullback below 180. It's been tradable on that basis if you're going to finesse it. Yelp's another one I think that is now run up, and now it needs some time to back and fill. I think Trulia, I'm actually kind of looking at buying this one in here as it pulls in. This is another one to look at. Notice the volume drawing up, and it's pulling into the 20-day exponential. It actually is retesting on the pullback. And it's possible that this might be viable. So there's a couple of, what was the other one we were talking about that's pulling back here? AFlop, as I like to call it right now, mainly because you have been 1, 2, 3. Well, Dr. K, wouldn't this meet your definition of, or would you give, because it is a smaller microcap, would you give it more room? The 6-day rule, would you give it a little time here?
Well, let's see. 1, 2, 3, 4, 5, 6. You know, I mean, you could say you could wait for an undercut of what it did on the 23rd. You know, that was a low of 20.6.
Yeah.
You could say an undercut of that.
Right.
You give it a little bit more leeway because it is a micro cap, and it's going to trade more volatile because of its small size. So giving it a little more room is perfectly reasonable.
Right. Okay. Anyways, I think that's all we have. One last stock is VIPS, and yes, it does look like it's trying to be viable along the 10-day. It's a little bit above it, so you might watch for it to pull in, or it may pull back. You're extended from this little cup formation, so you could pull back in a market correction. You could pull back into here. I think you'll have to see where the market goes from here, but it feels to me like it might want to correct a little bit more, and you need a little bit more washout. That's just my general feeling, but again, I think you play it on a stock-by-stock basis and go from there. So anyways, that's all we've got, you guys. So you want to hang loose, try not to make any big moves here, and we'll see where we are over the next few days. All right, take care.
So long, everyone.